Hi guys, thanks for tuning in to another episode of Nuggets News. Well, a big green week for Bitcoin. We had altcoins follow higher last night. There's so much macro news to get through, as well as all the altcoin news. So we do welcome 400 new subscribers this week. Thanks for joining us on this journey. We've got plenty of new members in our premium area, and this week you guys got a deep dive into the coming Ethereum hard forks, how I think that's going to play out, particularly for Ethereum Classic going forward. So I did want to announce our free competition. You just have to leave a comment, your favorite part of any video on YouTube or any social media posts, and you can go on the draw to win $50 over Lightning Network. So Wallet of Satoshi is free to use. It's an app built by the guys at Living Room of Satoshi, and we want to send you $50 over the Lightning Network every week to those that are supporting the channel by leaving comments below. Now, into the local news, where Australia ran their first current account surplus in 44 years. So this is great news, better than a lot of the governments around the world running huge deficits. But it's a tale of two economies where we had the weakest GDP growth in 10 years. So a lot of butting heads happening at the moment in the Australian economy. Tasmania, of all places, has the strongest economic growth, and that's not something that I would have expected. It's probably more a sign of how weak the other states are currently going at the moment. But well done to Tasmania there. But it's this economic dilemma between the RBA and the government. It's the same between Trump and the Federal Reserve. The government is saying to the central bank, you're not doing enough or rates are too high. And the central bank is saying, we've run out of monetary policy tools. The government need to do more. And they're blaming each other. And I think it's far deeper than that. It goes back to how money is created and the whole debt-based system. But you guys know that conversation. But certainly a dilemma. And at the moment, it's all pretty nice between Josh Frydenberg and Philip Lowe, the RBA governor, but I definitely see that things could get a little bit worse. Maybe not as bad as Trump, but this is going to continue to be an issue going forward. So the Treasury, last week asked the big companies to invest in the economy and jobs rather than reward shareholders. And straight away we see Harvey Norman come out and say they may need to raise more money to pay out fatter dividends. So it's absolutely this sort of backwards world we live in. Now, I know a lot of people rely on dividends and they can be a good thing if a company's got too much cash. But the problem that we see is too many companies just using this money to buy back shares and pay dividends and not, investing in growing the economies or particularly giving back in the form of wage growth. So we did our deep dive into the housing market and economy. You guys know that I love Martin North, and look, some people say that he's a bit doom and gloom, but if you want the bullish sentiment, you can watch that on any mainstream media or, all the news are going to tell you how great property is. So we're trying to give the other side of the equation. Now, I know that does come across a bit bearish sometimes, but at the moment, housing has been going down. So we do want to relay the most accurate data. If there's going to be a time when housing goes up, now maybe we go down that path sooner rather than later and the stock market goes up and the lower rates of money printing leads to inequality like we've seen in the US where asset prices rise. So look, maybe that is going to happen in Australia as well. But I certainly wasn't happy to see this article written by a senior journalist from the AFR attacking Martin about his personal appearance and the clothes he wears. And since when did the suits and ties and only those sitting in ivory towers are allowed to give opinions on different topics? I think social media, Twitter, it's really opened it up to other people. A lot of the time they are very smart people that don't work in these high up jobs, people that have only got their education and are set in their ways. So look, we're big supporters of Martin North. Those of you who know him personally knows that he goes through a lot behind the scenes as well. So I'm a little bit angry. That makes my blood boil when things like that happen, but let's move on. So obviously we've got our sponsorship with New Brighton Capital, free consultation if you guys are interested. Set up your self-managed super with some Bitcoin, some crypto, gold or silver. They'll help you do all this. We've got a discount there below if you mention Nugget to save you guys some money, but this is becoming a super popular service, pardon the pun, and you guys seem to love Mike from New Brighton Capital. He's been on the channel a few times. We love supporting these Aussie businesses and we're thankful to them for supporting us as well. So over to Hong Kong, where we saw Lam unexpectedly withdraw that extradition bill. This is one of the things that people have been rallying, taking to the streets for, and stocks are back up on this. It's a minor win. One of the 5 demands has been met, but this just shows the power of the people to take to the streets, whether it's the yellow vests or Hong Kong, to get what they want. So great stuff there. We're going to continue to see civil unrest if inequality and government overreach continue. So over to China, where they cut their reserve ratio for banks. So by now you're probably familiar with banks and the fractional reserve system and their capital, that they have to keep a certain amount in there. So what they're doing over in China is dropping that amount, and that releases $126 billion of liquidity, into the stock market, into the system. So it is dangerous for the banks. It brings them closer to collapse if something was to go wrong. But in China, we've seen the government, the state, step in and save those banks, buy up their assets. So different countries are taking different approaches to printing money or pumping liquidity into the system. And we haven't really seen anything like this in the US or Australia, but very interesting to watch all these new things being tried. Now, the trade war isn't just between the US and China. We see Japanese beer exports plunging 97% to Korea on trade tensions. So one by one, countries are sort of turning inwards or trying to look after themselves when times get tough. Now, that's also the case over in Britain. We've seen Brexit continually in the news. Boris is pushing hard for this to happen no matter what. They don't want to kick the can down the road. But what we did see for the first time here was Jeremy Corbyn push back against the election that he was calling. I think it's the first time in history that this has happened, where an opposition leader has refused to go to an election. So let me know what you guys think of this if you're over in the UK. Now, one thing that Europe have been really good at is calling out some of these big corporations. So glyphosate, the weed killer by Roundup, there's been links to possible carcinogenic actions, and we've seen it banned in a lot of places in Europe. So Germany is the next one to get rid of it. But in the US, these big corporations, the lobbyists, they've got a lot of power. So even though we see it being not allowed to be used in Europe, we're still going to see it in the US and these other places where money runs corporations and government. Now, this all ties into health, how the world of money and finance and government works. So I know these headlines, some people say, why are you including them? But we're doing a podcast soon. We're going to talk about how money and big pharma corporations have bought and paid for a lot of the lobbyists, the government, the rules. It all ties back into finance and money, guys. So hopefully you do enjoy these different headlines. Now, this is another case of social media overreach of our data and privacy, where the US can now deny you a visa if you or even your friends are critical of their policies. So this is something that we maybe see in China or Russia. We'd expect for them to have these sort of outlooks towards the people. But it's coming to the US, it's coming to Australia, coming to a country near you, where if you don't agree with what the government are doing, that is going to be suppressed, whether it's on YouTube or social media or not even being allowed into a country. So look, Google being accused of breaking these new EU data privacy laws, YouTube paying a $170 million fine. This is all coming under the microscope. Governments are looking at these tech giants. So Apple is the next to hint at developing their own cryptocurrency. Libra style of basket currency seems to be the flavor of the month now, more so than issuing your own stablecoin. But every big corporation is getting into this space. Jerome Powell coming out and talking about Libra, saying it could have, very systemically important side effects. So he said that it's going to be regulated to the hilt. He doesn't think it's going to come soon, but it really is making people question, well, what is value and currency, particularly, each currency, each country having their own. Now that there's this basket, if people decide to use it, what is it going to do to those local currencies? Now, this has been a problem already. Emerging market currencies are losing a lot of value against the US dollar. We're seeing those central banks of those countries cut rates, most since the financial crisis. Capital controls, Argentina this time, $10,000 limit. So these are the sort of things that have caused Bitcoin to boom in the past. We read headlines about how it's breaking record volumes in Venezuela. Now, if we look into that a little bit further, we can see it in the terms of the amount of money that's flowing into Bitcoin, it's gone parabolic. But we have to remember that so has the devaluation of their currency. So in terms of absolute numbers of Bitcoins, it's not record highs, but in terms of the amount of money that's going into Bitcoin, it is. So two ways you can look at that, but more and more people are choosing plan B rather than watching their own currency lose value. Now, the big story of the week in world markets were the trade talks resuming. I spoke about this, that the market's going to love it if we get any resolution. And sure enough, stocks, yields, everything just boomed on this announcement that trade talks are going to start again in October, even though it doesn't really mean anything has changed at this stage. So when we look at, deeper, what's going on in the US, whether it's Carmageddon, a trucking recession now, transport, manufacturing, these are the sort of things that are collapsing. Record streak, PMIs, longest streak since the GFC. Service sector, which is 70% of the US economy, is very similar to Australia. It's just not seeing any growth. And they're the people that we need to be spending money in this debt-based, consumer-based economy. So Alan Greenspan, former head of the Fed, coming out and saying it's only a matter of time until negative interest rates are in the US. Look, this guy would never have said this in a million years when he was head of the Fed. And now he's coming out and trying to save face. So, look, people laugh when I say that negative interest rates are coming to Australia. You guys notice when I post on my personal Facebook, people still laugh and say I'm crazy, but it's coming to the US. Why is Australia special or any different? They're not. This is a sure thing. Now, remember when mortgage rates used to cause a surge in home prices? This is a cool tweet by Northman Trader. I recommend you give him a follow. But what it's showing is that those mortgage rates have really dropped in the US, but it hasn't led to a surge in home buying and home purchases. So as we drop these rates, it leads to the rich and those that own the assets being able to leverage up negative gear in Australia, and maybe the stock market and home prices absolutely boom. But it's not a good thing if wages aren't going up and more people are being able to buy houses. It just leads to the inequality. And we've already seen this in the US. The Fed admit that their actions have led to inequality. So this is something that could happen in Australia. I know we're seeing a bounce at the moment, but it's their worst nightmare if they drop rates and the housing market doesn't recover. Now, this is the implied Fed funds rate. So what is the rate going to be by the end of 2020 versus what the Fed is saying it's going to be? Now, I've spoken about this before. The Fed always said it's going to get better next year. We're going to get back to 2 or 3% growth. Everything's going to be fine. But you guys know what the slope looks like of interest rates over time. It's going down. We are going below zero. The bond market is the smartest money in the world. I believe them. I don't believe the jawboning that the Fed and that central banks are doing. So when Alan Greenspan's coming out and telling people to go buy gold and asset prices that will increase in value over time, it's a very definitive statement. I just can't believe we're hearing these sort of things. Janet Yellen's saying we're never going to have a recession in our lifetime, and now she's come out and said that there's a big chance of a recession. These people have no idea what they're talking about, and yet they're the most important people in the world deciding what happens with the global monetary supply. Now, everyone's interested in gold at the moment. I did this video on how to play gold and silver and if now is a good time to buy it. And I warned you guys that we've had this parabolic run. It reminded me of the Bitcoin and crypto run where everyone piles in near the top and says, how do I buy? So I think I literally said in this video that we're likely to pull back to the moving averages and let this cool off while the smart investors that got in early, we've been talking about this for a long time, they're taking profits on their position. So long term, yes, gold and silver are great, but dollar cost averaging for most people is the best option because they just FOMO in at the wrong time. These are emotion-driven cycles, the same as crypto. So the gold and silver tokens by Ainsley have been added to CoinSpot. They represent 1 gram of gold or silver. So there's 22 grams in an ounce, and so an ounce of silver is around $19, $20 in Australia at the moment. So that's how this works. It's all unallocated bullion in their vaults and it's all audited. It was awesome to see Bamboo app. These are another app where you can round up your daily spending and put it into Bitcoin or crypto. And they've added the gold and silver tokens as well. So this is a great way to dollar cost average into Bitcoin, precious metals. So Bamboo, it's only on iOS at the moment, but coming out on Android soon. I've been doing some work with these guys. I think this is such a cool little idea to get the average person into crypto. Now, Paxos teamed up with Binance this week to launch a stablecoin. They've also launched a regulated gold coin, so it's all the rage. All these other options are just sucking money out of the fiat system and into gold, into the crypto world. These market caps are going to increase and people are moving out of fiat. I really love seeing this unfold. So look, Korea's biggest entertainment company launching their own coin. Every bank and corporation, you guys are sick of hearing me say it, but it is going to happen. Now into the altcoin news. So this is a map of all the companies building on top of the Tangle IOTA. So a couple of companies in Australia down here. Some really cool ones joined up this week. If you want more information on that, head over to tangleuniverse.publiciota.com and check that out. Now, one thing I've been talking about is IEOs. Personally, I think you should avoid them because they are just the new ICO. 99% of them are going to flop. There's been one or two that have performed really well, but majority of them have died. And I really think that this is going to hurt the exchanges and the exchange tokens as well a little bit. But do your research. I just really think that these are wrapped up in a new package, and I told you guys to avoid these unless you're a trader, unless you want to flip them for a quick profit. But even that game, it's just so dangerous to play. Now, Traveler is the latest project to head over and join Binance Chain, but I really think this is all just a marketing ploy. So yes, I know Neo has been struggling. They've left the Neo blockchain. I'm going to have Neo on the channel very soon and ask them some tough questions about what is going on over there. But yeah, Binance have got the power. They've got the following. This is all about marketing and getting users for these projects. So it's not really about who has the best technology. It's about who has the most eyeballs for these projects. Now, Binance did get caught out plagiarizing their margin trading terms and conditions, and BitMEX called them out on Twitter, so that was pretty funny. Look, I think CZ apologized, but maybe not the first time Binance has caught being a little bit naughty there, but let me know what you guys think of that. Something I do think is pretty funny is BitLord talking about forking XRP. So this started out as a joke. It's been picked up by a few smaller sites. I did mention this a few weeks ago, and now we've got Forbes talking about it. Literally mainstream media. And BitLord, I spoke to him yesterday and he said that he's got developers reaching out, and what started off as a joke is now looking more and more likely to happen. So I'm not sure what to make of all this, whether or not it's going to happen, but again, let me know what you guys think. Follow BitLord on Twitter for a laugh. He's certainly a bit of a character, but I can't believe this is starting to get a bit of traction. Over to the Ethereum news, and Ledger Live have finally added support for a raft of ERC20 tokens. So you can store any of these tokens under your Ethereum address, but a lot of people worry because they sign into their ledger and they can't see the token in the app anywhere. So if you paste your address in a blockchain explorer, you can see what tokens are in there, but now Ledger will actually bring it up so you can see the exact token in there. So I've done tutorials on Ledger Live and how to set up that ledger, but it's cool that they're actually supporting more tokens. And again, it just shows you how early on we are when the market leaders in hardware technology and support are only now just adding support for all these ERC20 tokens. We can't expect the average man on the street to even understand how this all works yet. So Ethereum's got those hard forks coming up. October for Istanbul on the testnet, and then ETH 2.0 in January. I've done a video on that if you want more information. I did that deep dive for members about how I see this playing out, some trade ideas that I've got around this as well. There's going to be 2 Ethereum chains. There could be possibly 3 if more happens and there's more contention around that hard fork, but something I'll continue to cover for you, but watch that Ethereum 2.0 video if you haven't already. Into the Bitcoin news, where we've got over 20 million addresses now with more than $1. So at the moment, there's a lot of wealth concentrated in the hands of a few, those top 100 addresses, but as more and more Bitcoin is spent and it gets more widely adopted, that disperses. So this is a rough metric because obviously people can have more than one Bitcoin address, but this is just a good guide to the number of addresses and how the ecosystem and uses, I guess, are expanding. Now, we had a big move higher, particularly towards the end of the week when Bakkt opened their warehouse. So 94,000 Bitcoins moved just hours before. Maybe this is related. We're not really sure yet, but I love how we can see all this on-chain data. Bakkt is opening on the 23rd later this month. I told you guys I suspect that this could cause a big green week this week last Sunday, and that's certainly what we got this week. In terms of on-chain data, it was interesting that we see someone pay $700. So they could have paid $35 or even less if they weren't in a hurry to get this transaction through on the blockchain to move $1 billion. Now, this gets into the debate about if Bitcoin becomes super popular, are people happy to pay a higher amount for the security of larger amounts? And Bitcoin sort of replaces the US dollar as the world sort of standard measuring stick of all other currencies in value. But then on top of it, just as we have Visa, MasterCard, PayPal, we then have the Lightning Network or, atomic swaps, and we can pay for things over Litecoin or Litecoin's Lightning Network. And it all sort of ties back and builds on top of Bitcoin. So really cool stuff. I know that there's lots happening and Bitcoin developers are taking their time to make things more efficient and bring down those fees. But as long as SegWit adoption keeps increasing and we get these other things through, it's good to see the most efficient things being tried before we just go to increasing the block size. And that's my thoughts, and I know some people don't necessarily agree with that. So VanEck, SolidX, we've seen LedgerX, ErixX, everyone seems to be launching their product apart from this ETF. They just can't get it over the line. So there's so many ways that institutions can now get in with these exemptions and OTC trading. But what this means is that they're all getting their seat at the table at this low price of $10,000. And then once the ETF opens to the retail public, again, they're going to end up paying a high price when they want to put it in their IRA, their retirement account. Buy shares for their trading account, for those people that aren't familiar with the technology and don't want to sign up to an exchange. So it's funny to watch this play out. The early adopters have got a good price for Bitcoin. We now see Wall Street getting what I think is going to be looked at as a good price before they open it up to the mass retail public that are going to be paying a higher price for their Bitcoin. Now, last night I tweeted this about bond yields being more interesting than altcoins. And if you haven't noticed, the YouTubers, the Twitter accounts, people that couldn't have cared less about finance and economics are now covering stuff like bond yields and negative interest rates. So look, I'm pretty passionate about that stuff. I've been talking about it for years to get you guys into Bitcoin, gold and silver early. But I think this is just a sign that altcoins are almost, nobody wants to touch about them and talk them. And yet we're kind of in this disbelief phase where we've had a pretty big run, a bit of a pullback now. And yes, the bad coin's going to die off, but I believe the overall market cap is probably going to increase sharply and really leave people thinking, oh, geez, I shouldn't have sold my alts. Or just when everyone thought that they were dead, they had this huge rally. So look, I know that some people think that only Bitcoin is going to survive, but I certainly think that alts are still going to survive. Look, 1% of your portfolio in any project, Bitcoin should be the cornerstone. I've been saying that for years. People are way too overexposed to alts, but at some stage, they can pump higher in percentage terms because of their low market caps. Now, the best way to trade these are some of the index products over at FTX. So this was an awesome interview. I'm a bit disappointed this didn't get more views because I really think that Sam, and he's a former quant from Wall Street, some of the stuff he's building over at FTX is truly remarkable. So they've got their exchange futures token, for example. If you think BNB token and these other exchange tokens are going to go down in value because the IEO bubble's over, then you can short the index. Or if you think altcoins, the top 10 coins are going to go up, you can get long the altcoin index on margin. If you think the shit coins are going to go down, you can short that index. So awesome stuff. They're going to continue to bring out new products. I've switched over to use them. I've joined that trading competition. You can actually bet on what traders you think you're going to win in that competition as well. So keep an eye out for that on our socials. But into the technical analysis, and on September 2nd last week, I did this write-up for members talking about how there's way too much negative sentiment around. All the bears have got their big, bold predictions about lower prices, and I didn't hear a single person talking about that when we hit 14,000. So those sort of times when Bitcoin tends to take off and leave people wanting more and waiting for that final pullback, and it never really comes. So backed opening deposits, yes, this was another fantastic play. We saw a big move higher this week. So when we check out that weekly chart, it formed that higher low in the moving averages. That's what we were looking for. A great swing trade. If we zoom into the daily time frame, we're still in this descending triangle that it is forming. So if this does get down here, everyone's going to be looking for this break lower, like when we danced along 6,000 and then had the big spill. If everyone is piling into their shorts and expecting that to happen, I'd probably expect the opposite to happen, or even sooner, and it's going to leave people wanting lower levels. So I know technically on the weekly and monthly chart, this doesn't look great, but I still don't think it looks that bad. Continually getting in on these oversold 4-hour RSIs has been a great swing trade. Now, this new indicator is something that I'm trialing. It's been built by someone I know, a trader and a developer. It's been giving some good pivot points or buy or sell signals, some great trades lately. So this is something I've done a write-up on for our members. I'll continue to let you guys know how this is going. But yeah, this pretty much works on all time frames on everything. Fantastic combination of all my favorite indicators that he has programmed into one asset. So look, last night Ethereum and a lot of these other coins, the Ethereum Bitcoin ratio had a nice run. The altcoin index, Litecoin, XRP, the first signs of life coming off a low base. So they're the sort of things that I'm watching for at the moment. But yeah, all eyes are on this triangle with a lot of this chop happening and catching people off guard. So I can't wait till we've got some clearer direction, and it's going to be extremely bullish if we finally break this pattern after these weeks and weeks of correction. So look, I hope you guys have enjoyed that. Don't forget our $50 competition to leave a comment on your favorite part of the video. If you want more information on anything we do, or you want to join our community, head over to nuggetsnews.com.au. Smash that like button. Thanks for tuning in, guys. I will talk to you again soon. And yeah, thanks for tuning in.